Let's continue our discussion, of course, focusing on the outcome of the just concluded MPC meeting amid fundamentals that shape decisions of the committee. And joining me virtually is the Director of Research and Strategy at Chapel Hill, Denham, Mr. Tajuddin Ibrahim. Good afternoon, Mr. Ibrahim. It's very good to see you.
Good afternoon. It's very good to listen and see you too today.
Thank you. Now, I was talking earlier to Professor Kenny Faye. I don't know if you listened, but we've taken an aspect of this discussion, at least try to trash it out. But I want to start with you. That what do you think, looking at the global end, how would this affect global capital flows? Many say there might be a slowdown looking at the Russia-Ukraine crisis. And how does all of this affect Africa's most populous nation, Nigeria?
Well, I think the way it really affects us is that Nigeria is lagging in terms of the global responses by central banks to development in the global economy. And let me give you an example. We track well over 20 economies globally around developed markets, emerging markets, and also African markets. And all those markets that we track, 8 countries this month have increased their interest rates. Why have they done that? They did it just so that it serves as a response to rising inflation globally. And sadly, what is happening in Russia and Ukraine in terms of the war between the two countries is not really helping matter. Rather, it is making prices to stay elevated. And one way that global central banks have been able to respond to address the impact is by raising interest rates. We have seen interest rate increases in the US, in the UK. We have seen also in emerging markets such as Brazil. We have seen aggressive interest rate increase in Ghana as well, and also in Egypt. So the way it affects us in Nigeria here is that we are probably going to see foreign portfolio investors move away more away from Nigeria to other countries to invest their portfolios in fixed income instruments in those countries on the back of higher interest rates environment in there. So we have left our own interest rate unchanged, but some other countries are increasing their own. What we should expect is capital flows in terms of portfolio investments will rather go to all those countries instead of coming to our country, Nigeria.
If you look at all of these considerations yesterday after that meeting, domestic and of course global, heightened geopolitical tensions and all of that, macroeconomic uncertainties, why do you think that the committee still decided to retain all rates, left everything unchanged?
I think they have acted well, in our expectations. That is what we expected. And I think there are 2 key considerations, and probably there's a third one to it. The first one is around the growth that we are seeing in the economy. The committee was clear in their minds that we still have a fragile economic recovery in Nigeria.
Yeah.
So there is need to allow that growth to strengthen further over the next couple of quarters. The second element is inflation. The committee unanimously agreed and said that increasing interest rates would not necessarily address Nigeria's inflation problem, because our inflation problem is driven by structural faults, or let me say structural weaknesses. So the third element for consideration is around FX, our naira. So in balancing, between, or let me say among those 3 factors, they decided to leave all the monetary indicators unchanged. And I think they have acted well in that regard, because if they had increased interest rates, it will have affected or slowed down the growth rate that we are seeing in the economy. And if they had increased interest rates, we wouldn't naturally see, a decline in inflation on the back of that. If they had increased interest rates, chances are that, it will be positive on the currency front, but we cannot neglect growth. We need to consolidate on the gains that we have seen on economic growth in the past 1 to 2 quarters. I think those are some of the factors that they considered in leaving the rates unchanged.
The issue of rising energy costs and, of course, PMS, and the big one now, AGO, is also something that many analysts are saying must have contributed to the rise in core inflation. Looking at what we saw, what's your reaction to this?
My reaction is that, we seem not to have seen the end of the rising core inflation. The last time I was on this show, I was talking about how inflation could rise significantly if nothing is done, very quickly to address the fuel, shortages, that we have. And I think, we are beginning to see some moves by the government, but we have not, completely seen the end of fuel scarcity in the country. So it is going to remain a major factor for consideration in as much as, there is still war between Russia and Ukraine. It is going to be a major factor for consideration if we do not address our local storage facilities to ensure that Nigeria is able to supply, to the population that is well over 200 million people. So the practice of, fuel going higher is a major consideration for, the rise we are seeing in core inflation. And I think the authorities need to act as fast as possible to address and bring normalcy back for all Nigerians to enjoy.
When we talk interventions, I know you follow most of the interventions from the Apex Bank that's talking about the central bank trying to support growth. I'd like to get your views. What sectors do you think the CBN needs to focus on at the moment? They are doing a lot. Just yesterday, there was injection in the power sector. They are also saying they want to intervene to try to support NNPC at this time. Don't you think they will get overwhelmed at a point?
I absolutely think that, they naturally, will get overwhelmed at some point. But I think, they are moving in the right direction. And this is partly why I believe there is need for the involvement of the private sector in terms of underpinning the economic growth of the country as a whole by, lending more to the private, sector of the Nigerian economy. So we have about 8 critical sectors that the CBN has been lending support to in terms of, credit. And I think, agriculture is very important. I also strongly believe that the healthcare sector is very key. And in my view, the power sector, which is, like the third in my mind, is also, very important. But I think the CBN can only do much. They cannot do everything. There is need for the private sector to come in this case. There is need for us to see inflows of investment into the power sector, utilizing the capital market. I think if we get the strategy right and we approach the capital market, we most likely are going to solve the bulk of our problems in the power sector and also in the other major sectors of the Nigerian economy, in my view.
A little bit on the capital market. Many are saying, considering the same issues, talking about the global issues, many say investors might remain sitting on the fence. They have been very cautious with trading. Do you see any major remarkable investment coming in, considering all of these challenges being faced globally?
I agree that we may not actually see much of inflows in terms of investment from foreign investors. But let us look inward and then we realize that we have a huge saving pool, that we call the pension fund, that is well over 13 trillion naira. So that pension fund, for instance, if we have the right product that speaks to addressing the problems that we have in the power sector, of course, pension fund administrators can invest in such projects to lift Nigeria out of darkness. I think we just need to put the right strategy in place. We have that savings in terms of the pension pool. We just need to execute. Plan well, execute well, approach the capital market, and then you will have access to some of the required capital instead of waiting for foreigners to come and develop your country for you. Borrow locally and develop your economy, in my view.
I'll follow up with you because it's a very interesting conversation when we're talking power here and all of the challenges that we face. And many talk about investment, even from the private guys that's talking about the discos and everyone. And the argument from the discos all of the time is that they need to charge a cost reflective tariff. Now, which comes first, the chicken or the egg? That is where the question lies. Nigerians will tell you, we want power supply and we'll pay. But the discos will tell you, we ain't got enough money to service the plants. What is your take?
So this is where I talked about investments. To get money to build the required plants and increase your distribution, increase your supply, you need capital. You need money to execute all those. And I have just suggested around, the local funds that we have, which is the largest, savings pool in this country. The pension fund, for instance, can partly address, these challenges. The pension fund, the way it works is that they invest in products. So if we have, capital market operators that can work with the discos and, the gencos, and then we have products that the PFAs or the pension funds can invest in, then they will invest in them and they will be able to have money to execute projects, and they have to charge cost reflective rate in that regard. We will have light, but we will just have to pay for it.
Interesting stuff. Let's go back to our GDP figures, and we saw the interesting performance of the non-oil sector. With all of these challenges and projections, do you think it will continue to be this way? Do you think there will be any change, and how well can we get more from this sector, looking away from oil?
Well, I think we still can get more from the non-oil sector, and this is where I really support the CBN in terms of their several interventions. And my view is that if not for some of those interventions, we probably will be talking about a much lower growth rate for the non-oil sector of the Nigerian economy. So let us take a look at agric, for instance. Agriculture is going to grow at a faster pace by the time some of the credits that have been extended to farmers and a lot more players in that sector begin to play out in terms of their impact. The second element for my consideration, I think, is the manufacturing sector. That sector is also seeing credit from the CBN, and if they accelerate on the extension of credit, most likely we are going to see sustained support, sustained economic growth in the manufacturing sector. So the non-oil sector is here to stay in terms of driving the Nigerian's economic growth. What we just need is availability of credit where needed. We need execution of plans where needed. We need execution of strategies where necessary to drive and ensure that the non-oil sector continue to flourish, considering the downside risk that exists in the oil sector of our economy. I think those are very crucial to the outlook of the non-oil sector.
Brilliant submission there. Finally, the big news today, NNPC is saying, FARC don't expect much from us. We don't have much money. We need to pay for subsidy. What effect do you think this will have? At the time, the governors reacted to this. That was at the time where they threw their weight behind subsidy removal.
Well, I think it is a major one, and it is going to be a shock to a lot of state governments that do not have much to fall back on in terms of internally generated revenues. And this is where the governors too need to retool strategies to ensure that they grow internally generated revenue, considering the glitches that we have with respect to oil revenue generation and distribution by the NMPC. But generally speaking, I think this is going to be short-lived. It is not going to last, forever. And I want to believe that over the next couple of months, the federal government will be able to put things in place, and that should allow the NMPC to disburse money as expected and required to the state government. But my strong advice to state governments is to strengthen the internally generated revenue, have an achievable target for it, grow those targets, and ensure that they can, largely speaking, depend on IGRs going forward.
Brilliant stuff there. I must thank you so much. I've been speaking to the Director of Research and Strategy at Chapel Hill, Denham. It's Mr. Tajuddin Ibrahim. Great to talk to you this afternoon, and thank you so much. Do enjoy the rest of your day.
You too.